You can't say that I'm going to sit down at this specific time and I'm going to trade my strategy and I expect to do so many trades and make so much money. It simply doesn't work like that. Sometimes the markets are good, sometimes bad. Sometimes I wait 2 hours for an entry, sometimes I get 10 in an hour. So although I'm always looking for trades while discussing specific strategies or indicators, sometimes the market simply doesn't allow. And if we force our trades and try to take trades that's not with our strategy, we're going to make mistakes and it's going to cost us. So yeah, we're going to try and get some trades. I'm going to be actively hunting trades while I'm discussing the ADX today. The ADX is by far my favorite indicator. If I've always said if I'm only allowed to use one ever, that would be it. I love it, and it's in my opinion one of the best indicators to use on a technical chart, especially on short term. So let's dive right into it. Also, if you guys, those of you watching, if you have any questions while I'm explaining something or if something's unclear, please ask in the chat, and I'll answer that for you to the best of my abilities. Yeah, okay, let's dive into it. So before we can actually use the ADX, we need to understand what it consists of and what it is actually showing us. Interesting, anybody who's did any research on trading, especially classical trading, will definitely recognize the name John Wilder. So the ADX was developed by him in 1978. So it's been around for a long time and it's still in use today. So that tells us that it's stood the test of time, and it's still valid, and we can still actually definitely use it in today. All right, so the ADX, I've got this ADX on my screen here. Let's switch over to the charts. There we go. I've got the ADX on my screen here. At the bottom, you'll see it. We've got, it consists of 3 lines. We've got the green and red. Those are your DI plus and DI minus lines. The DI plus is the green one and the DI minus is the red. The default colors on the pocket option platform is a bit different than this. I just changed them to this because this is how I'm used to it. And the yellow line represents the ADX. The DI lines, the DI plus and DI minus lines, are calculated using an exponential moving average of the value DM. And DM would be the high of the previous candle. So when you set your ADX to period 14, for example, it will only look at the DI plus calculation, will only look at the highs of each candle and take those into account. So it's the exponential moving average of the closes divided by the average true range. The same goes for the DI minus, but the DI minus is calculated on the lows of the candle. So what this effectively shows us, we can if we look at the DI lines, we can think of them in a way, not quite, but in a way you can actually think of them as showing you the rate of change, or the speed at what at which price is changing at the moment. And then your ADX is the average true range of both those lines, of the DI plus and the DI minus. That will be the ADX itself. That's the yellow one showing there. Right, so important to note, the ADX line, the yellow one there, does not show direction of price movement. It shows strength of movement. So if the higher the ADX is going, that means the more strength there is behind a move, or you can look at that as more momentum behind a move. So a rising ADX will tell us that it's gaining strength. The trend is gaining strength. And when it's falling, it does not mean it's changing direction. It means the trend is weakening. So that's a common mistake I've seen a lot of people make, is they think when your ADX starts turning downward, you get the trend is about to change, which is most definitely not the case. It just shows you that the trend is weakening. The strength of the trend is weakening a bit. So where do we look for trades? It is commonly accepted that the ADX, when the value is below 20, that the market is moving in a sideways direction or ranging, and that there is no real trend to speak of. And 20 to 40-ish, we will call an emerging trend. That means we're gaining speed, if that makes sense. We'll look at some examples now. So 20 to 40 means it's gaining speed, and the ADX above 40 is seen as a really strong trend. And we can use that information actually to our advantage, and I'll show you how just in a second. Okay, so examples of using the ADX. Examples of using the ADX. Some people, I've seen a lot of people actually try to use the DI crosses. So that means people will, when the DI minus, for example, here, the DI minus crosses the DI plus, people will take that as a signal to sell. And opposite is true. If the DI plus crosses the DI minus, people will take that as an opportunity to buy or a signal to buy. The problem with this is you will see that here, for example, there's a lot of false signals, a lot of them on the ADX. And I find this to be very inconsistent and very unreliable to try and trade crosses by themselves. Another interesting thing, though, those of you that watched the video on divergence, the ADX can actually be used as divergence, to spot divergence. When we got, for this example here, we had price make a low, new low, push up a bit, make a new lower low, but the ADX is coming down gradually. That's telling us that the strength of the trend is slowing down. Doesn't mean it's changing, just slowing down. But we'll see if we can entry right here just now. Another thing we can use this for, the ADX can be used for, is breakouts. I did a video on trend lines a week or two ago. Let's go to a higher time frame just to have a look at that. No, 5 minutes. Where did we have? If we look at this area here, for example, we had a kind of a channel there that formed for a bit. Let's get that in there. Let's get that in there. We had basically 3 touches on the line there, and we're gonna just make it a parallel channel. Is that parallel? Close enough. There we go. Okay, so we had a channel here that formed here. Price stuck to it for a while and then broke through. You will notice when it actually did break through the channel, we had our ADX start to climb quite a bit, and it went up all the way to, well, basically 51. So if you're using trend lines to trade, you can look for, a lot of people look for breakouts, but often one of the difficult things with trend lines is to identify breakouts. See because sometimes you get fake. It will break through and just come back immediately. And this is one of the ways we can use to identify, differentiate between fake breakouts and actual breakouts, because the ADX is was climbing here, which tells me with the DI plus being, the DI minus, sorry, being above and the DI plus being low, that meant we were moving in a downwards direction and the trend was gaining speed, and we could have entered a short here, a sell trade here, and would have been it did go down for quite a bit. So that's one of the ways to identify it. Is especially if you're using a continuation strategy. ADX is brilliant for that, because if you get a continuation signal in a trend, your ADX will confirm by climbing, and it tells you there's a lot of strength behind this trend, behind the current trend, and it's likely that it will continue. Not always, but likely. Let's go back to 10 seconds. I like the 10-second charts when I'm doing 1-minute trades. So it's also going to get the most examples in the restricted time that we have. Trading a trap candle. I don't actually understand that question. If you can maybe elaborate a bit on that, I'll try to answer that for you. Okay, so we've got DI crosses and we've got breakouts. It's two of the ways that you can use the ADX. Another way that we can use the ADX, which is one of my favorite ways to use it, is what I call hollow moves. Excuse me. So a hollow move is, let's see if we can find, when we get a DI spike like we did here, this was a DI minus spike, meaning the price was busy going down, but the ADX is really low. That tells us that price is changing very quickly, but there's no momentum behind it. There's no strength behind the move. So essentially, price is in a sideways move in a range if the ADX is low. And we know that if price is in a range, it tends to go up and down within a certain price range. Given that information, what I like to do is, as soon as price gets like it did here, we were in range basically in this area here. We had a break and it came back, and it ranged in this area here for quite some time. I then like to play the DI spikes and put them in reverse, basically. So we get a massive, very fast price change. In this example, it went down, but my ADX is low, so no momentum or no strength behind the trend, which means to me that it's kind of likely to reverse. There's a good chance that it's going to just snap back. It's a hollow move. There's no strength or no people behind the move. That makes sense. Good day, NE. And welcome. Right, guys, the last thing I'm going to be talking about on the ADX, the last example of how we can actually use it is with moving averages and then divergence as well. Not divergence on the ADX though, divergence on one of our oscillators. So what I'm going to do is I'm just going to add my stochastic in. If you guys saw if you didn't see the video on divergence a week or two ago, go watch it. It's great, and it will you'll get an idea of what it is that we do, what I'm looking for here with the ADX, how to combine it. Okay, so when we say moving averages and trend lines and divergence, this is basically how I use the ADX when I'm trading, especially when I'm trading short term. But it's not limited to. You can actually use this on 1 hour and 4 hour charts as well. The only difference is that you're not going to get a lot of entries. It's going to take, if you're on a 4 hour chart, it might take you a week or two before you get one entry. But it is a good system. I actually use it when I'm doing some Forex trades and whatnot as well. So what we're looking for is, like we said, the hollow moves. We're looking for DI spikes, but DI spikes that coincides with our strategy that we're using. In this example, if I'm using divergence, I'm going to look for divergence. We had some here, divergence here. It was barely there, but it is valid. But I had a DI spike again on a low ADX. So my ADX was, we had to drop and the ADX was climbing, but it started coming down, which told me that the move, the strength behind the drop was slowing down. And that would motivate me to take a buy trade on the divergence that formed afterwards. We've got some divergence here. Let's have a look at this. Let's see if this is gonna, this is very sloppy though. I don't really like to trade it when the stock is going crazy like this, crossing or zigzagging, and it's when it's not smooth. I'm not too fond of it. But if we get, for example, if price does come down to this area here, this white line is trend lines that I drew in on the, I think it was the 5-minute, and I get a spike, I could safely assume that there's a good chance that it's gonna that it will reverse, and I could actually do a trade. It didn't quite touch though. Didn't quite touch. So divergence, trend lines, and moving averages. The moving averages I've got on my chart here at the moment is the classical ones, 50, 100, and 200. So when an ADX spike coincides with, or with it, when a DI spike coincides with a moving average and my ADX is still low, that's one of the things I like to trade. That I take that as a signal that price is going to reverse. It's going to use that moving average or that trend lines, as it's a trend line is the same principle. It's going to use that as either support or resistance depending on where it is and you know what price, where price is in relation to the moving average or the trend line. So let's see if we can find a few trades and get some good examples. But to come back to what Bugsy said just before we started the video, sometimes we don't get trades, we don't get entries, and the worst thing you can do is to start forcing entries because you're impatient. It's a horrible thing to do. It's a horrible habit to develop. You got to take what the market gives you, and sometimes it will give you good days and a lot of trades. Sometimes it doesn't. Your strategy will not always work, and you need to identify the times when your strategy is working and not working, and then not trade when it's not working. That's a difficult thing to do. That's one of the things most people struggle with, really struggle with, is to identify that. Firstly, to understand that the market is not always the same. You cannot say, I'm going to sit down at 5 o'clock every day, do 10 trades, and I'm done, and I'm going to do them in half an hour. That's it's not viable. It simply won't happen. If you do try to do that, you're going to force trades, and you're going to pay dearly. It's going to cost you a lot of money if you start doing that. Okay, we might have a good trade setting up here. We know that often if price goes through a resistance or a support area, it will come back to test. And we've got our moving averages crossing now. We are above a support line and we're below a resistance line. This is a resistance area now that price has moved through. I can now expect, this doesn't mean it will happen, but I can be on the lookout. One thing that could happen is that price spikes up to retest this area. That could happen. If this does, and I do have an ADX spike, or a DI spike, while my ADX remains low, that would be a sell trade for me. But I have to wait for it to happen. It's good to have a plan, and it's good to be able to identify moves before they happen. One must just be careful also not to commit to that before they do happen. I mean, you want a good technique. We're kind of discussing one at the moment, man. Like I said, the ADX, if I was only allowed to use one indicator for the rest of my life, it would be the ADX. Hands down. Hands down. Let's see if we can find some examples while some decent spikes where we had what you call it? What's the time here? See how every time this touched the trend line, the ADX spiked a bit. It spiked a bit. This wouldn't have been a trade though. The DI spiked. I'm sorry, the DI spiked, but the ADX was climbing, yeah. But this could have been a good trade because we had a relatively high DI plus, low ADX. ADX value was below 20. No, it was, yes, below 20 still. And it's right on a support area, resistance area. And it turned down. But this is one of the things that one needs to wait for. A good example here where we price went changed direction a bit and crossed the moving averages. Every time they attempted to break through the moving average here, this area here, we had DI spikes. You had DI spikes and you had a low ADX. You could have basically, every time the DI turned, the DI spiked, you could have taken a trade. So exactly what I thought would happen did, well, kind of. It didn't give me an entry. There was no proper DI spike here. So it's not a valid trade for me. Another thing also is that since we know that support and resistance, since we know that support and resistance, if support fails or support holds, same for resistance, I wouldn't trade this. Sorry, I wouldn't take a buy here because this just failed. It failed very recently, and even though I've got an ADX spike, I would be very cautious to trade it. Very, very cautious. Colleague asking why I'm not using the AI function. Colleague, I'm a classical trader. I've been trading for over 20 years now. I like to do my own thing. I've probably never will use AI to trade. That's me personally. I really hope we get an example or two. But this is, in essence, a brilliant example of what the ADX actually does for us. When we had big movement here, market price going up, price coming down, we had the ADX climbing, telling us the strength behind the movement. And at the moment, the ADX just keeps going down, and it's showing us that the market is ranging. And yeah, and while it's ranging, I can actually look for decent spikes. If we get a spike around the 50 area, DI, one of the DIs will spike. If one of the DIs spike around the 50 area, it could be worth it to take a trade and put it in reverse. Because my ADX is super low at the moment, super low. Tells me there's not a lot of momentum in either direction. So we are basically in a ranging market. And I would still like to see a down spike. We could actually draw this in. But right now the market is ranging, so it does not look like we're going to find a trade real soon. Let's look on the 1 minute. Same on the 1 minute. We are approaching the US Open. We'll get some movement by the time the US opens. You guys have any questions on the ADX itself? Anything you don't understand? Nope. We did have a DI spike here, but it didn't quite make it to the moving averages. And I do like them to be, to at least touch. But this is the way the market goes. It's been a slow morning for me in general. And sometimes we have slow days. And if you don't have the discipline to not trade on slow days, best to not trade at all. Take a break. Even if it's just a couple of hours, just take a break. Market will change. We just don't know when. We do have some divergence here on the 10 seconds. But this red candle avoided the entry for me. No, not really divergence. It's actually the same. 402. Okay, so I know some of you are really watching or really waiting for this. So guys, there's your promo code. ADX50 will give you a 50% bonus on deposit. Hope you guys use it wisely. So unfortunately, it doesn't look like we're actually going to get trades. Decent entries. It's such a pity. But it is what it is. Market can be cruel sometimes. We could actually, and this is 50. So if I switch to 1 minute, it would be 100. So that was a tap. Okay, we could actually have a trade setting up here. Okay, so see how my DI is spiking at the moment. The DI plus is spiking really well. But look at how quickly my ADX is coming up as well. That means that there's this move is gaining momentum. So putting this in, taking a reversal trade, yeah, it would be too risky for me. Way too risky. There's nothing that tells me Nothing else that tells me this might be a place for price to reverse. Let's see check the 1 minute. Yeah, maybe. Let's extend this to that area. Now, if it hits there, I'll take a trade. It might be worth taking a trade. We can see we've got the DI spike on the 1 minute as well. And I do have a resistance area here. So this will be a trade that I will take. But it needs to hit there first. It doesn't look like it's going to. Sometimes it gets really frustrating sometimes because all your entries are close and you really want to take them because it looks like you're missing out. But the discipline of a trader is to wait for good entries to your strategy. Switch back. Let's check out the 10 seconds. Like we mentioned earlier, the ADX is turning down, but it does not mean that the trend is going to be reversing. It just means it's slowing down. So we'll have to wait and see what happens. So if it keeps coming down, I can plan a, it will probably, if it comes down to about this area here, I can plan a divergence trade, a hidden bullish, because it's, the stock is already super low. What I would like is a decent DI spike though. That would be a buy for me if I can get that. But for now, it's just coming down. I'm going to have to wait for the stock, the stochastic here to cross upwards. Until it does, we've got a red's coming up. The DI minus is coming up hard now, which is good. But now my price is coming down too low. If price drops further here, before my stochastic turns upwards, it's not going to be divergence anymore. See, it just voided. Yeah, this is going to be a super risky one. Probably a retest, but it's not clear to me. So I'm going to avoid that. It's a retest. I don't like to take unnecessary risks. I'd much rather play it safe. But the ADX showed us the ADX was coming down, and the DI, we had a DI minus spike right on the moving averages. I just don't like these big moves at all. This is an anomaly. If we look at the normal price movement, we had 1 year, and this one didn't come back, and we have 1 year, and it could go either way. But plan your trades. As I'm sitting here, I'm thinking this might form some bullish divergence. That's one of the things that might happen. It could just keep pushing up and form divergence again here at the top, which could actually really happen. If we form divergence on this resistance line there, or if we form divergence on the support or just below the support, we could get some trades. But this is what trading is, unfortunately. It's a lot of it's waiting and patience. Okay. So I'm going to ask one more time if there's any questions on the ADX, on the stuff we spoke about today. Anybody have any questions? Nope. We're good. Yeah, it's pushing. Likely going to hit here first. That would be a trade for us. I'm kind of tempted to just wait to see if if it does. Get at least one good example of a trade using the ADX. Nope. Nope, she's coming down again. Done for now. Okay, guys, I hope you learned something. I hope you can take something valuable from this and apply it to your own strategies. As always, test this first. Please don't just jump in. Test it a bit, get a feel for it. And I hope you guys have a great week. It's Thursday. We've got one day left and it's weekend. So enjoy the rest of your week. And I'll see you guys next time. Have fun.